Welcome to FinSights Daily by Finvestin, where we cover the daily updates from the world of finance that impacts your day-to-day life. I'm your host Narendran. Quick reminder, play this episode at 1.5x for a better experience if you are short on time. We have got three important stories to cover today that might impact your finances. A significant stock market downturn, a major policy shift in India's nuclear sector, and some important changes to EPFO rules that could affect your retirement savings. Let's dive in. The markets took a significant hit yesterday with the BSE Sensex falling 0.67% to 79,299 and the Nifty dropping by 0.73% to 24,069. What's causing this downturn? Well, there are several factors at play. First, we are seeing heightened tensions between India and Pakistan after a deadly terrorist attack in Kashmir that resulted in 26 civilian casualties. This has created uncertainty in the markets, and as we know, markets hate uncertainty. Second, foreign institutional investors have been on a selling spree. They are pulling money out of Indian markets for a couple of reasons. Rising US bond yields are making those investments more attractive, and Chinese markets are suddenly looking like a better value proposition as Trump is considering to reduce tariffs on Chinese goods. All 13 major sectors ended in red, with small cap and mid cap stocks taking the biggest hit, down 2.6% and 2% respectively. If you have invested in these segments, you might have noticed a dip in your portfolio value. What should you take away from this? If you are a long term investor, try not to panic. Market corrections of around 10% from peak values, which is what we are seeing now, are normal parts of market cycles. However, if you are planning to make any major investments in the coming days, you might want to stagger your entry or wait for some stability. Nuclear policy changes. Now, to some potentially positive economic news. India is making a significant change to its nuclear power policy. The government is considering allowing foreign companies to hold up to 49% equity in domestic nuclear power plants. This is huge. Until now, the nuclear sector has been largely closed to private and foreign investment. Why does this matter? India has ambitious plans to increase nuclear power capacity from the current 8.2 gigawatts to a massive 100 gigawatts by 2047. That's nearly a 12-fold increase. This expansion requires significant capital and technology, which is where foreign investment comes in. For those not familiar with nuclear energy jargon, a gigawatt is a unit of electrical power equal to 1 billion watts, enough to power roughly 750,000 homes at a time. The good news for the economy is that major Indian conglomerates like Reliance, Tata Power, Adani Power, and Vedanta are already in talks to invest around $26 billion collectively in this sector. This could mean more jobs, better infrastructure, and potentially lower electricity costs in the long run. This move also aligns with India's commitment to achieving net zero carbon emissions by 2070, as nuclear power is a low emission energy source that can provide consistent baseload power to complement renewable energy. If you are an investor, keep an eye on companies in the power sector and those involved in nuclear power plant infrastructure development. They might see some interesting opportunities in the coming years. EPFO rule changes. Finally, some good news for the 6 crore EPFO account holders. The Employees Provident Fund organization has introduced several changes aimed at making your life easier. First, if your universal account number, that is UAN, is linked to Aadhaar, you can now update personal details online without submitting any documents. That's right, no more paperwork for changing your name, date of birth, or personal information. Changing jobs? Good news. If your member IDs are linked to the same UAN or if two different UANs are linked to Aadhaar with matching personal details, PF transfers can happen without approval from either your previous or new employer. This removes a major headache for many job changes. Here's something exciting. EPFO plans to introduce an ATM card facility for PF withdrawals, which is available 24/7. This could reduce the current waiting period of 7 to 10 days for fund disbursement. Also, the current cap requiring employees to contribute 12% of a fixed 15,000 basic salary is set to be removed. Soon, you will be able to contribute based on your actual salary, allowing for larger retirement savings and potentially higher monthly pensions when you retire. And speaking of pensions, a parliamentary panel has recommended increasing the minimum pension under the employees' pension scheme from 1,000 rupees to 7,500. Citing rising living costs, the government is expected to evaluate this proposal by the end of 2025. For those of you juggling multiple financial responsibilities, these changes could mean more control over your retirement savings and potentially better returns in the future. The stock market may be down, but policy changes in nuclear energy and EPFO reforms show that there is always movement in our economy. Some challenging, some promising. Remember, in personal finance, staying informed is half the battle. Well, that's all for today's FinSights Daily. Thank you for joining me. This is Naren signing off. I'll see you on the next episode with fresh updates from the world of finance. Have a wonderful day and remember, stay financially savvy.